Preparation of journal in accounting. What is a journal book? A journal is the primary book of accounts in which business transactions are recorded chronologically and systematically for the first time. It is also called the book of original entry because all transactions are recorded here before being posted to the ledger. Each transaction in the journal includes date of the transaction, accounts affected, debit and credit entries, a brief description or narration. This practice ensures accuracy and transparency in financial records. Rules for making journal entries. Journal entries are made based on the rules of debit and credit under the double entry system. These rules depend on the types of accounts involved in the transaction. Real account, assets. Debit what comes in, credit what goes out. Example, bought machinery for cash. Machinery account, debit, cash account, credit. Personal account, individuals, firms. Debit the receiver, credit the giver. Example, paid 5,000 rupees to RAM account, debit, cash account, credit. Nominal account, expenses and incomes. Debit all expenses and losses, credit all incomes and gains. Example, received commission 1,000 rupees. Cash account, debit. Commission account, credit. Format of a journal entry includes 5 columns, date, particulars, ledger folio, debit amount and credit amount. In this example, machinery is purchased for cash, so the entry will be machinery account debited to cash account credited with amount, for example 50,000 rupees. Subdivision of journal. As businesses grow, recording every transaction in one journal becomes time-consuming. Therefore, journals are subdivided for efficiency. These are called subsidiary books. These include cash book, records all cash and bank transactions. Purchase book, records credit purchases of goods. Sales book, records credit sales of goods. Purchase returns book, returns to suppliers. Sales returns book, returns from customers. Journal proper records all transactions not covered in other books, adjustments, depreciation, opening entries, etc. This subdivision helps in reducing workload, assigning specific books to specific personnel, ensuring easy verification and control. The journal is the foundation of the accounting process. Knowing how to properly prepare journal entries and understanding their rules ensures that financial records are accurate, complete, and ready for further processing into ledgers and final accounts.